The biggest question that every investor has is, when is the bottom of the stock market crash? And everyone's been trying to crack the secret since the beginning of the stock market and they had their first crash. The reason is there is a lot of money to be made if you're able to time the exact bottom, because the stock market generally recovers that 50% drop over the next years and continues to skyrocket even higher after that. You could be making 100, 200, even 1,000% on your initial investment if you invested at the bottom of stock market crash. However, the secret to this all is that no one will be able to ever time accurately with 100% confidence when the bottom of the stock market crashes. And the reason is there's 3 different types of investors in the market, and you could never understand all these investors and know how they're going to make the next decisions. And the 3 types of investors are the individual investor. These are people like you and I who are investing in the stock market, and we're just picking stocks or just buying index funds. Everyone has a different life stage, goal, or circumstance that they're going through. The second type of investor out there are those who manage large portfolios of money. These are like hedge fund managers or mutual fund managers, where they take other people's money or other companies' monies into a large pool of funding and they distribute it amongst certain types of stocks depending on the goal of that portfolio. And there are probably thousands of these different hedge fund managers out there, and they all have different ways of thinking. In addition to all of that, in the recent years, we've seen a rise in the algorithm trading. And what algorithms are is essentially a piece of software that takes certain data inputs. For example, a piece of software could be taking in data inputs from Twitter. How many people are tweeting about buying stock A, and how many people are tweeting about selling stock A? And that algorithm could say, if the difference of people tweeting about buying and selling is 50, for example, I'm going to buy into the stock because there's a lot more people buying the stock than selling the stock. So now that we've established that we're not able to predict with 100% confidence when the bottom of the market is, let's end the video, smash that like button, click the subscribe to hear more, and leave a comment down below of how this video sucks. Just kidding. Although we can't invest with 100% confidence that today is the bottom of the stock market, we can still start putting our money in and using our brains to think of when is a good time to put money into the market. Maybe it's today, maybe it's tomorrow. So in this video, I'll be talking about my opinion on when I think is the best time to invest in this current market crash. Let's get into it. Welcome back to The Fire Grind. On this channel, we talk about everything and anything that has to do with personal finance, especially how you and I can become financially independent and retire early. In today's episode, we're going to be focusing explicitly on the stock market and how you can use this investment vehicle to achieve financial independence. And when you achieve financial independence, then you're able to do the things that you love doing and not care about how much you get paid. Maybe you wanted to be a gym trainer or just work at the grocery store for 4 hours a day. These are things that you could do when you have financial independence. So in this video, I'm addressing 3 different types of people specifically. The first person is if you're waiting on the sidelines with cash and you've never invested before. The second person is you invested at the highs of the different recessions that we've seen over the years and sold out after a crash and never got back into the market. And the last person is if you sold out recently because of the scares of all the big day drops and you're waiting to come back into the market. And I guess if you're still in the market and looking to deploy more cash, this can be for you as well. On the flip side of this all, if you fall into one of these 3 categories or are all 3 of them, maybe you should turn off the video right now and forget about investing in the meantime. And the 3 categories are if you have short-term loans and you live paycheck to paycheck and you also have no savings. So these are the 3 high-risk categories for people who want to get into investing, and maybe I advise not to do so, because if you don't have any sort of good financial stability currently and to be able to sustain yourself, then if the market continues to drop and you need cash instantly, you might be selling at a loss in the market. It's best for you to find safer investments like maybe some sort of GICs or just a high interest savings account. Before we get into the meat of this content, let's just go over my Wealthsimple portfolio and just see how it's performed over this past week. So now that we're in my portfolio, we can see that my portfolio is at $11,700 and it's down 17.5%. To some of you, that would be quite dramatic. It's been a rough week in the markets with a bunch of different shutdowns happening in various countries, including Canada. We've seen the government put in different measures to increase social distancing such that the virus won't spread, and hopefully these will work in the next couple weeks. Companies are shutting down like mine. A lot of people are working from home now. However, as a long-term investor, I do believe that this portfolio will rise up and surpass its original value eventually in the next couple of years. So I'm not too worried, and I'm going to be buying into this weakness. A special shout out to Kari. I don't know if you're watching this video, but thank you for signing up through my Wealthsimple link. If you haven't done so already, you can get $5 for free towards starting your investing career if you sign up for Wealthsimple down below in the link that I've posted. So just click the link and follow the instructions there, and you can get $5 towards investing after you've put in $100. And right now in this video, I'm going to be talking about maybe why you should consider investing in the market now. Without further ado, let's get right into it. Now, if you're still with me and figuring out when is the best time to invest in the stock market, smash that like button and click the subscribe button so you can hear more from my channel. The best time to invest in the stock market, and I'll add a disclaimer before I say when is the best time, is this is my personal opinion. You should do your own research and figure out what is the best time for you to act on putting money into the stock market, because I'm not responsible for your financial decisions. But I do think personally that this is currently the best time to invest in the stock market because the market has dropped 30%. And when we look back at previous data, it's fairly safe to say it's a good time to invest in the stock market after a 30% drop. Looking back at the two most recent crashes that we have, these are the dot-com bubble and the 2008 financial crisis. It took about 2 years for the dot-com bubble to burst and the markets dropped 30%. However, it only took 1 year for the market to come back after a dip below the 30% and recover so that you're break even. Now, if we look at the financial crisis, it took a year for the market to drop from its highs down by 30%, and it took another year after that for the market to recover, because the market continued to drop after that. However, it did make its recovery in a year. So it's probably safe to say after 2 years from now that the market will probably either come back, break even, or end up higher. And this is obviously based off of history. It's not guaranteed, but after such a dramatic drop, people tend to start buying into the market because there's a lot of cash laying around and people don't want their cash just sitting there doing nothing and collecting dust and essentially getting eaten away by inflation. So people will eventually snap out of their senses and the world situation that we're in right now will recover and this economic steam train will start to pick up. And if we look at how the markets have performed after the dot-com and the financial crisis as of today, we can see that if you put your money in after 30% drop in the dot-com bubble and you look at your portfolio today, even with 30% drop, you would have gained 138%. So investing $10,000 back then, that would mean your portfolio today is $23,800. That's not even including the dividends that you've collected over the years and reinvested back into the portfolio. Now, if we look at the 2008 financial crisis and you invest in the market after it dropped 30%, you're looking at today 150% gain. So that's $10,000 back then would equal $25,000 today. And again, that's not including the dividends that you gain over the years that you reinvested. So some of you might be skeptical that the markets could continue to rise for the next 10 to 20 years. However, I have 3 theses as to why I believe the markets will continue to rise. And these revolve around automation, the mass amounts of data that we have out there and that we're processing, as well as the speed of communication. Automation is key to the rise of our economy as a world because businesses become a lot more efficient as they automate different processes and different steps in their business. And things like transportation as well as manufacturing are being automated a lot more quicker nowadays because people see the need for that. Factory workers or drivers can get sick or just have accidents whereas robots are a lot more reliable and predictable, as well as they can work 24/7 if they wanted to, only unless they break down, then they fail to meet that kind of criteria. However, humans, we can probably work about 8 hours a day, maybe 12 if we're stretching it, but this takes a huge toll on our bodies. So as robotics continues to develop, we're going to see these manufacturing companies be able to produce more goods, and as a result, their profit margins will go up because they're using robotics in this, and they don't need to employ people paying out benefits or paying salaries consistently or paying for vacations. The second innovation in technology that's really going to advance our society and economy is the mass amounts of data and our ability to process it. As we get more data, we're going to be able to make more informed decisions at a quicker pace. Things like supply chain rely on data heavily. And the reason for this is if companies can match the demand for the product with the supply that they create, they can spread their money over various product lines or deploy the capital more efficiently and not have to do as many sales on their products because they made too much inventory, for example. Another way data can help a business advance is in their advertising department. With the rise of social media, these companies are able to take the interests of their users and categorize people into different categories. And companies can pick those categories of people that they want to advertise to. For example, Facebook can specifically know which group of people are interested in basketball shoes based off of their interactions on Facebook and Instagram. They can see if they like basketball shoe posts or if they post about basketball shoes. And companies like Nike, who are making basketball shoes, are able to go onto Facebook and advertise to these specific users. Now, some of you might be thinking that this is a breach of privacy. However, I think this actually makes advertising a little bit more enjoyable to look at. No longer do people like me get advertisements for women's clothing. I can get advertisements for things that I like or things that I'm looking to buy. For example, maybe a new monitor or a new laptop. The last area that I'm going to be talking about of how a company can use data is in their customer reviews. No longer do companies need to create focus groups and gather people into these groups to present a product to them and get feedback on it. Now they can just release the product and go to YouTube or just release it to a select number of people and actually get some advertising out of it as they write reviews or create videos on these products. As companies get more customer feedback, they get to understand what people like and dislike of other products. And also, other product ideas can come out of this feedback. The last part of my thesis as to why I believe the stock market will continue to rise is the increase in communication speeds over the years. We can see 50 years ago, mail was probably the primary form of communication and telephone. However, today we're able to send emails, picture messages, we're able to send video files. Sooner or later in the future, we could probably be in different places using AR. We can physically see what's happening in 3D on the other side of the world. Now, with the increase of communication speeds and the throughput of data in our networks, we're able to make decisions quicker. And this will really impact the research and development areas of society. If we're able to make decisions quicker in research, we're able to advance technology and advance processes that we have in society. And as a whole of a society, we're able to continue to create more value and in return create more wealth for us investors. However, there's a caveat to all this. As a society, if we move way too quickly and we don't look at all the different drawbacks that our decisions will have, we can run into some problems that will build up over time, and before we know it, we can't correct them as easily. One example is our environmental impact onto this earth. We have cut down forests, we have stripped this land of its nutrients too quickly, and now who knows what's going to happen in the next 50 years. At least we've started to realize this and we're trying to do something about it, but are we doing enough? What will happen in the future? Will our land become a wasteland? And other things like pandemics that happen and wars that are happening, these will also affect the livelihood of companies out there because it can stop businesses from continuing to function and stop people from buying these luxury goods that they don't need. Now, the saving grace in all of this for us investors is that if we decide to hold the cash now or invest in now and these events happen, the outcomes are the same. Cash won't really matter. People will be scrambling for the basic needs. But most likely, this won't happen in the next 10 years or 20 years, some sort of apocalyptic event. Even with this whole beer sickness that's going around, I have my doubts that it's going to infect half the world. At most, maybe another 10,000 or 100,000 people. But the stock market in general should be able to recover a year or two from now. Smash that like button if this video has helped give you some different perspectives on the stock market, and leave a comment down below if you have any questions. Click the subscribe button so that you can hear updates from my channel, as well as future portfolio updates that I give. Keep up the grind and have a great day.